Welcome to Nasdaq Trade Talks. I'm Jill Malandrino, Global Markets Reporter at Nasdaq. Joining me for this segment, we have Dr. Russell Rhoads, Associate Clinical Professor of Finance at Indiana University, to discuss pivoting to a more bearish stance in the market. Russell, it's great to see you as always. Welcome back to Trade Talks, and your tone turning from bullish to bearish over the past couple of weeks. Why the change?
A couple of factors have really gotten into my mind with respect to the equity market, but a major one is the relative performance between the Nasdaq 100 and the S&P 500. And the Nasdaq NDX really did lead us higher throughout the first six and a half months of 2023. But now that it seems to be lagging a little bit, the S&P 500 seems to be catching up some. And I feel like technology stocks are so economically sensitive that we saw a very positive sign in the first 6 months of the year out of the NDX. But now that it's kind of rolling over a little bit, not beating the S&P 500 as much, initially I was getting a little bit neutral, and because that pattern has kind of kept itself in place, along with a couple of other things, I feel like there might be a better chance to jump into the Nasdaq 100 in the near future. How's that?
What about the Nasdaq 100 Volatility Index, known as VolQ, versus the index itself?
Oh, absolutely. And that is a major factor. In fact, I should have mentioned that VolQ versus VIX, it's been very elevated relative to VIX, which I consider a warning sign for the NDX. But also, and this is the one that I get a lot of pushback from the bulls on, because it takes a while for this to play out. But when you see a divergence, and when I say a divergence, usually we think of a divergence as things moving in opposite directions. But when you see a volatility and the underlying market moving in the same direction, which has sort of been happening with VolQ and the NDX since the middle of May. And to put a number behind that, VolQ hit its 2023 low on May 17th and has kind of grinded higher since then. And the Nasdaq 100 has made 18 new highs. So typically when you see the broad-based index making a new high and it's not getting confirmed by the volatility index, in time, that seems to it seems to be an indication that people are paying up a little bit more for protection. And eventually it turns out that they needed that protection. So this, both of them trending in the same direction is something that I've been keeping a very close eye on.
Have you seen traders with a similar outlook?
Oh, absolutely. And a Nasdaq 100 related market that I like to trade an awful lot, XND, the 1/100th size, over the past 3 or 4 weeks, when I do weekend reviews and I go back and I look at block trading activity, it looks like somebody has been consistently in 100 lots using XND to collar a possible drawdown in NDX. They've been able to get in and out of they've been getting into them either to small credit or no credit or debit whatsoever. And they're actually able to trade out of one of them shortly after we got the employment number, and they took in a credit when they got in of like 14 cents or so, and it only cost them about 8 cents to get out. So actually made a little bit of money on their hedge, which not something you generally go into a hedge for, but it was kind of nice to see, at least for that one trader. And those collars are still on. They continue to be rolled. And my understanding, just one last point on that one, my understanding is this is possibly a registered investment advisor who has multiple accounts he's hedging. So he's using XND so he can break it up amongst his accounts, which is one of the great uses of the smaller size index option contracts.
All right, Russell, appreciate the insight as always. Thanks for joining us on Trade Talks. I'm Jill Malandrino, Global Markets Reporter at Nasdaq.